Hello everyone, and welcome back to the channel. Today, we're re-diving into a topic that is causing quite a stir across the UK housing market, a potential new mansion tax. Reports are swirling that Chancellor Rachel Reeves is considering a plan that could see homeowners facing some hefty new bills. So, what's the story, and what could it mean for you? Let's break it all down. The proposal on the table suggests that owners of properties valued at £2 million or more could face an annual charge. Specifically, it would be a 1% tax on the value of the property above that £2 million threshold. Let's put that into perspective. If you own a home worth £3 million, you'd be looking at an extra £10,000 to pay every single year. A £5 million property, that would be a £30,000 annual bill. It's a significant amount of money, and it's being positioned as part of a potential soak the rich strategy to help fill a reported £40 billion hole in the public finances. Now, this isn't the first time we've heard about a mansion tax. The idea was previously floated by Ed Miliband's Labour Party back in their 2015 general election manifesto. Interestingly, the person now leading the budget preparations at the Treasury, Torsten Bell, was Miliband's director of policy at the time. Back then, the plan was slightly different, suggesting a £3,000 annual tax for homes between £2 million and £3 million, with higher rates for more expensive properties and second homes. The current proposal seems more akin to a policy the Liberal Democrats championed in 2010. It is estimated that this new version could raise between £2 billion and £3 billion for the government. As you can imagine, this has sparked a fiery debate. Critics, including the Tories, have slammed the plan, calling it a form of class war that punishes aspiration. Shadow Chancellor Mel Stride has been particularly vocal, arguing that Keir Starmer and Rachel Reeves are breaking their promises not to raise taxes. He claims that instead of controlling spending, they're choosing to tax hard-working people and risk chasing away wealth creators that the economy relies on. His message is clear. Under Labour, nothing is safe, from your home to your savings. This debate is happening against a backdrop of pretty grim public sentiment about the economy. A recent poll by Lord Ashcroft reveals that a staggering 73% of voters think the economy will perform badly over the next year, with only a tiny 1% feeling very optimistic. Interestingly, when asked who they trust more to run the economy, Kemi Badenoch and Mel Stride are slightly preferred over Keir Starmer and Rachel Reeves. The poll also shows that nearly half of all voters do want Labour to break its manifesto promises on tax. So, beyond the political back and forth, what are the practicalities and potential problems with a tax like this? Well, one of the biggest hurdles is property valuation. The current council tax system is based on property values from way back in April 1991. To implement a mansion tax, a massive and complex revaluation of properties across the country would be needed. This would be a bureaucratic nightmare and likely very expensive to administer. And it's not the only property tax reform being considered. Just last week, reports suggested Ms. Reeves was also looking at introducing new, higher council tax bands for more valuable properties. Before joining the Treasury, Torsten Bell was the chief executive of the Resolution Foundation, a think tank that has proposed some radical ideas for property tax reform. One idea was to scrap council tax altogether and replace it with a flat 0.5% charge on a property's value each year. They also suggested a complete overhaul of inheritance tax. So, it's clear that shaking up property taxation is definitely on the agenda for some key figures. Property experts have been quick to weigh in, and they've raised some serious concerns. Lucian Cook from the estate agent Savills described the mansion tax as a blunt and crude instrument. He argues it doesn't accurately target net wealth. For example, he points out there is a huge difference between someone who owns a £2 million house outright and someone with a large mortgage on a property of the same value. The tax doesn't distinguish between the two. Furthermore, he highlights the difficulty in getting accurate valuations for high-end properties. Homes worth over £2 million are often unique, making their value subjective. This means that almost every valuation is likely to be contested, leading to endless appeals and administrative costs. Mr. Cook also raised a crucial point about fairness. He worries about older, retired households who bought their homes decades ago for a modest sum. They've seen the value of their property skyrocket over time, but their income hasn't kept pace. These asset-rich, cash-poor individuals could be hit with a massive tax bill they simply don't have the means to pay. Neil Hudson, a housing market analyst, shares these concerns. He believes the Treasury is likely looking at this purely as a way to raise revenue, without much thought for the fairness or efficiency of the housing market. He warns that the top end of the market has already been struggling for the last decade due to high stamp duty rates. This new tax, he says, would just depress transactions even further. While the government might collect more from an ongoing tax, you could see a strange market distortion where suddenly a flood of properties are listed for just under the £2 million mark to avoid the charge. He also predicts a wave of legal challenges as homeowners fight the valuations of their properties, creating a messy and prolonged process. As he put it, there will be a lot of unhappy estate agents in central London if this goes through. Of course, For now, this is all speculation. The Treasury has officially stated that tax policy decisions are made at fiscal events like the budget, and they won't comment on future changes. But where there's smoke, there's often fire. The fact that this is being seriously discussed by influential figures preparing for the next budget means it's a very real possibility. The core of the issue comes down to a fundamental question: how do we create a fair tax system, especially when it comes to property? On one hand, supporters of the tax argue that property wealth has gone largely untaxed for years, and those with the broadest shoulders should contribute more, especially when public services are under strain. They see it as a way to rebalance the scales and fund essential services. On the other hand, opponents see it as a tax on aspiration and a penalty for success. They argue it would disproportionately affect people in certain areas like London and the Southeast, where property prices are exceptionally high, and could trap people in their homes, unable to afford the tax but also unable to sell in a depressed market. What do you think? Is a mansion tax a fair way to raise much-needed funds, or is it an unfair attack on homeowners that could damage the property market? It's a complex issue with passionate arguments on both sides. Let us know your thoughts down in the comments below. We'd love to hear your perspective on this. Thank you so much for watching and for getting informed with us today. If you found this video helpful and want to stay updated on big topics like this, please give it a thumbs up and consider subscribing to the channel. It really helps us out. We'll be keeping a close eye on the budget and will bring you all the latest as soon as it happens. Until next time, take care.